Welcome to Markets Now. I'm Michelle Rook with Ted Seifert with Zaner Ag Hedge. A lower day in livestock. Grains were mostly higher, except for some fractional losses in the corn market. And Ted, it feels like at least we ended off of our lows in the corn market after making, 3-year lows here. So have we digested most of the bearish news, do you think there? Is it priced in?
I'm hoping so, Michelle. And even September actually held Friday's low. So that was good to see. And then, we closed well off those lows, near unchanged, December corn closing higher. So you get the feeling that, we've gotten past the shock of the USDA reports, the higher acreage, the higher quarterly grain stocks. We know these numbers are going to have to be accounted for on the next WASDE report, and that will be a thing for both old crop and new crop. But again, the original sticker shock is now past us, and we are very, very oversold, 22% on the relative strength index. The funds are shorter than they've really ever been at this time of the year. Maybe this is be a good time for them to come in and take a little bit of profit on their short positions, give us a little bit of a technical bounce. And honestly, we're still in the very key weather or haven't gotten through the key weather time frame for corn. So there is still reason to have a little bit of weather premium, I would say, into the markets. We've not had a perfect year so far, flooding in areas, hot and dry in the east. And while the forecast right now isn't terribly concerning, you never really know, right? So I would like to see a nice little recovery here in corn. I don't think it's going to be a substantial or a change in the overall trend, but it'd be great to see a bit better of a bounce and allow for some sales to be made. But if we get to the end of this month, or even into the end of the second, third week of July, and we don't have a weather issue, Michelle, that could be a big problem for corn, and we might not have the lows in longer term. But I'm hoping that they might be in for the short term.
How hard is it going to be, though, to bottom a market when you have the farmers holding so much of that grain on farm? And how does USDA, you mentioned the balance sheets, how do they rectify demand when we get to the July 12th report?
Yeah, it's a great question, Michelle. First of all, on-farm storage of corn is up 37% year over year, and we have a little over 3 billion bushels of corn just sitting on farm. The scary part about that is that a lot of that's going to have to move before this new crop comes in. And if this new crop is going to look pretty good, that might start to happen in a big way towards the end of this month. So there's a lot of selling that's yet to hit the market. And again, we talk about the funds being really very short. And the funds don't necessarily have to add to that short position, but you have a natural seller that is yet to really come to the market in a big way. And that is sort of a ticking time bomb at the moment. So, I don't know. As far as how the USDA rectifies that on the July balance sheet, 135 million bushels higher than expectations on quarterly grain stocks does not necessarily mean that we're going to see 135 million bushels show up on old crop carryover. I think it'll be closer to around 60 million. That 60 million bushels very likely is going to get taken away from feed and residual demand and make its way onto the ending stocks number and therefore the beginning stocks number. Now, for new crop, that higher beginning stocks number gives us more of a cushion for a weather issue or any reduction in that national average yield, which I think a lot of us would argue is a little bit too high at a 181 national average yield. Maybe, I don't know. But then also you add 1.5 million acres, Michelle, and while we can argue that some of that acreage might not get harvested because of flooding, and so that the harvested acreage percentage could come down, the planted acreage number, along with possibly bigger beginning stocks, could be suggesting that new crop carryover could go up fairly significantly on this July report. So I think those were the things that when we saw the numbers from the USDA on Friday, these were the thoughts that we immediately had. So to some extent, I think these are now factored into the market. I don't think it's going to be a shock if that happens on the July report. But either way, it's just not painting this bullish picture going into the rest of the growing season. It gives us more of a cushion. I think it means that we have a little bit less concern over weather. There's less margin for error, or I'm sorry, there's more margin for error. So I think it's going to be a little bit more difficult to get a bigger weather rally at this point. Now that we have the acreage and the old crop stocks or beginning stocks cushion that was built into the market after Friday.
What about soybeans? A higher day on Monday. Was that just short covering, or we did have a rally in the soybean oil market? How much did that help?
the higher crude oil was helpful for soybean oil, and soybean oil broke some technical resistance levels that I think kind of perpetuated some short covering or just some technical buying in general. So that helps some strengthen the beans. But, in the beans, we continue to have this sort of tightness in the cash market for old crop. Farmers just aren't selling, right? And that's really pushed this inverse between July and November, and now it's really working into August, 1st November, because the soybean market is trying to free up some cash beans. The question is, why is it not working? Well, everybody's waiting for that $13 bean number again. We've been able to do something like that the last couple of years, so why not do it again? I don't know. I think the fundamentals are different, and just like we talked about on-farm storage and corn, the fact of the matter is that soybean storage is on-farm storage is up 44% from last year. There is a lot of beans out there. They're just stored on farm, and the market is trying to get those bushels, at least some of them. And rally's not been working. The inverse has not been working. You worry that at some point the market might use the stick rather than the carrot to try to pull out those bushels, because we know that at some point they will have to come to the market. So the strength in soybeans is good. I'd like to see, as we said before, I'd like to see a rising tide in the grain market here for the next week to 10 days. But I think that's going to offer some really nice opportunities for guys to sell, because if we wait too long and we get into the month of August and we're not having a big weather issue, and I'm not saying we won't, but if we are not having a big weather issue into August, there is going to be a lot of cash beans that have to hit the market, and that's going to put a lot of pressure on the market. So I would be looking for ways to get out in front of that and not waiting until everybody's dumping at the same time.
So the bounce that we saw in the wheat market on Monday, how much of that is corrective buying because we got hit so hard to the downside, or is harvest pressure just subsiding?
Yeah, I'm going to say both, right? I mean, man, wheat was down so many days. I mean, it was just an epic slide. We gave up. We were just under Chicago wheat was just right at 740. We got all the way down to just below 560. I mean, we gave back $1.80 in just a matter of less than a month, and we had gotten very oversold. I think in an at one point during the interday, we got to like 18% on the relative strength index, and that's an extreme case of being oversold. So technically speaking, we were due for a bounce. Now that we've gotten past, I think, the bulk of the harvest pressure coming from winter wheat, it's allowing for something like that. You had the reversal higher day here Monday. It looks pretty good, but I don't think the fundamentals have changed to become a lot more bullish in wheat. The quarterly grain stocks number, which is in effect the old crop carryover number, came in higher than expectations. So, I mean, our domestic situation for wheat is that we do have ample stocks. Yes, the global balance sheet is on the tighter side of what we've seen. Stocks to rate usage ratio is on the tighter side. But domestically, unless we start to see exports really pick up, it leaves us with a pretty decent size, a comfortable carryover, and the outlook for another comfortable carryover for next year. So I don't know. I don't see this as an extended rally in wheat. I think this is a technical bounce. I think it has maybe another 10 to possibly even 25 cents to go on it. Maybe that'll help out the corn as well. But I think ultimately these are going to be selling opportunities, Michelle.
And what about the cattle market? I know there was a little disappointment about just steady cash trade in the South. So is this just some routine profit taking, or is this market starting to top, do you think?
I think some routine profit taking. One, we are getting into our peak demand week or weekend or time frame of the entire year with the 4th of July holiday. And I think the expectation or the hope was that packers would be fairly aggressive on their bids early this week to kind of finish filling their needs for this demand weekend. But when that didn't happen, it really makes you feel like, okay, the packers are where they need to be. They're not going to be bidding aggressively for cash this week. And that leaves you with the question of what happens after this week? As we get into the summer doldrum months, do we see domestic demand slide, or does it stay fairly strong? I mean, I think I think the thought up until very recently has been it's an election year. They're going to keep everything looking really positive going into November. Consumer confidence is going to be high. We're going to continue to have normal or better than normal demand for this time frame of the year. But just recently, you started to see some things that are making you question the overall economy, whether we can keep things strong going into the November election. There are some concerns that are growing. So the fact that we were down a little bit today, I don't think is the end of the world quite yet, but it is something I'm going to say is a big red flag that really bears watching for the cattle market.
Okay, appreciate your analysis as always. Ted Seifert, Ag Hedge. That is Markets Now.